If you have saved some money and would like to invest, but you don't know how or what to invest in, and you don't want to lose all your savings, then in this video, I will explain to you what is investment and its basic principles, why it's important to invest and don't keep your money in a bank account, and I will share strategies used by the most successful investors in the world so you can get started with investing with little cash and little time. Hi, I'm Sabina. I'm a chartered certified accountant with diverse experience gained at one of the top UK accountancy firms and in the industry. On this channel, I share knowledge and strategies about finance, entrepreneurship, and self-development to help you achieve your financial goals and build a life you truly love. If that's something you are interested in and would like to learn more about, then please subscribe to my channel. This is not a financial advice, and I am not a financial advisor. Point of investing is for your money to be able to make more money. You can invest in cryptocurrencies, gold, stock and shares, real estate, corporate bonds, government bonds. Once you own an asset, there are two ways that you can make money. First way is that you buy asset today, that asset then grow in value over time, and you sell it at the later date for a lot more money than you bought it for. That's called capital gain. Second way is that asset generate regular income for you in the form of rental income if you invest in real estate, or dividend income if you invest in stock and shares. When a company declares a dividend, it means that it pays profit to its shareholders. For example, if you own 1% of a company that declared 3 million dividend, it means that you will receive $30,000. When you are buying a share, you are buying a percentage ownership in a company that you invest in. For example, Apple is a publicly traded company, which means the public can trade Apple stock. There are two main reasons why it's important to invest. Firstly, investing helps to beat inflation. Goods and services get more expensive over time, which means that your money loses its purchasing power over time. $1 will buy you less in 10 years' time than it will buy you today. For example, $1,000 can buy your iPhone today, but few years from now, when inflation goes up, that same iPhone might cost you $1,200. Secondly, investing helps you to create wealth through compound growth. Your asset will grow in value over time, which means that you will become wealthier and it can help you achieve your financial goals, like earlier retirement or buying your first home. The earlier you start investing and the longer you leave your money in your investment, the more you benefit from compound interest. Compound interest is the idea that interest earns interest. So when you first start to invest, you earn interest on the principal amount that you invested in. And then you will start earning interest on the principal amount that you invested in, plus interest amount that you accumulated in prior periods. And it will keep compounding. And that's why compound growth is a really powerful tool to help you create wealth. And that's what Albert Einstein meant when he said that compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. World's most successful investors say that's the easiest way to start investing is to invest in the index fund. What is index fund? Fund is a basket of stock made up of different companies. An index means that this fund tracks the performance of a market index. A very popular index fund is S&P 500, which is 500 largest publicly traded companies in the US. It includes companies such as Apple, Microsoft, Google, Disney+, Netflix, Tesla, and so on. For example, Apple makes up about 6% of the S&P 500, and if you scroll all the way to the bottom, the companies at the bottom make up around 0.01% of the S&P 500. Companies are frequently added or removed if they no longer meet the criteria of the index, such as market capitalization or being US-based company. For example, new publicly listed company or a company large enough can be added to the index. If I invest $1,000 into the S&P 500, my investment will be split between those 500 companies based on their weighting in the S&P 500. So of my $1,000, about 6% will go into Apple, which means that I will own about $60 worth of Apple stock. When you choose to invest in the index fund, you effectively invest in all the companies within that index. And when they perform well and generate high profits, their value increases over time, which means your money tracks that increase and also grows. Warren Buffett, one of the most successful investors in America, also recommends investing in the S&P 500. Firstly, average rate of return of the S&P 500 is about 10%, which is very impressive rate of return for a long-term investment. Secondly, S&P 500 is well diversified because it includes 500 companies across different sectors, such as healthcare, technology, finance, utilities, energy, and so on. A well-diversified portfolio is a less risky portfolio. Thirdly, you don't need to spend time to research individual companies, analyze their performance, or understand their financial information to figure out what to buy that is aligned with your investment strategies or your values. There are studies that show that very few funds overall outperformed the S&P 500 in long term. Other well-known index funds that you can invest in are Nasdaq 100, which is another American index fund that focuses on tech companies, or FTSE 100, which is top 100 companies listed on London Stock Exchange. If you want to get started with investing and buy stock and shares or index funds, you need to open brokerage account with a broker. It's very easy and can take only few minutes to open an online account. Very popular one, Vanguard, BlackRock, Fidelity Investments, but it depends on where you are in the world. With other platforms like Trading 212, you can trade stock and shares, but also open an ISA, which is an individual saving account if you are in the UK. Other benefits of using Trading 212 is that you can practice investing with a fake money, whereas market conditions are identical. And then when you are familiar with the concept of investing and ready to use the real money, you can easily switch. You don't need thousands to start investing. It depends on the platform you use and your location. For example, if you're in the UK, with Trading 212, you can start investing with as little as about £1. And with Vanguard, you need £500 lump sum to start, or £100 regular monthly investment to start investing. And you want to invest through tax advantage saving accounts, such as ISA if you're in the UK, or Roth IRA if you're in the US. That way your money grows and any profit or gains that you generate are not subject to tax. Once you open the account, you need to transfer your money, select what you want to buy, and set up automatic payment. By setting up automatic payments, you're removing the need to manually log in every month and make a transfer, and you're building good financial habits. Simple strategies to manage price risk when you first start to invest is to invest small amounts every month rather than big amount at the single point of time. When you invest regularly, you reduce the risk of buying when the share price is the highest. For example, if I invest $100 today and the share price is $20, I will receive 5 shares. But next month, when the share price is $25, I will receive 4 shares. Buying at different prices over time average out your cost per share. Then you will need to hold your investment for a long period of time to give it opportunity to benefit from market growth and compound growth. For example, if you invested $1,000 into S&P 500 in 2008, just before financial crisis, and then markets crashed by 60%, now your $1,000 is worth $400. If at this point you sell your investment, you realize the loss of $600 because you bought your asset at $1,000 and you're selling it at $400. However, if you hold your investment, market recovered by about 2012, and then it kept growing and growing, and by 2021, you would double or triple your money. I hope you found this video helpful. If you did, please let me know in the comments below, and I would appreciate if you subscribe to my channel. If you like this video, you might also like a video where I explain how you can become a millionaire through investing in compound growth. I will see you there.